Good morning, everyone. This is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 8th of December. The ECB takes its turn. The central bank race continues, with the ECB being the next bank to decide on monetary policy for the last time in 2016. As usual, the decision will be followed by a press conference from President Mario Draghi. Considering the recent string of optimistic data from the Eurozone and the fact that the bloc's 5-year inflation expectations have been rising steadily since September, we do not expect the ECB to introduce any fresh easing measures today. Nevertheless, we do expect the bank to extend the minimum duration of its existing QE program, as well as to tweak the parameters of QE regarding what the ECB can buy, so the bank doesn't run out of eligible assets to purchase before the program ends. Our view is based on the fact that the Governing Council has signaled repeatedly that QE will run as long as necessary, at least until there is sustained adjustment in the path of inflation, something not evident yet. Given that market expectations are along those lines as well, we expect investors to quickly turn their attention to any hints with regards to the future path of policy, if they indeed get to what they already anticipate. In the Q&A session, President Draghi may be questioned again with regards to QE tapering. However, our view is that it is too early for something like that, and we expect Draghi to downplay such questions. Many ECB officials, including himself, have increasingly emphasized the lack of upward pressure in underlying prices, while he has repeatedly warned that the risks in the euro area remain to the downside. Euro-dollar is now trading near the key obstacle of 1.08, and we believe that the rate may hover near that zone ahead of today's meeting and could trade a bit higher if the bank delivers what the market is already anticipating. However, any potential rebound may remain limited if the president indeed confirms that it is too early for the Governing Council to discuss tapering. A break above 1.08 is possible to prompt extensions towards the next resistance zone of 1.0850. Yesterday, at its own final meeting for this year, the Bank of Canada decided to keep policy unchanged, while in the statement accompanying the decision, bank officials maintained a neutral bias, stating that the current stance of policy remains appropriate. Overall, the bank acknowledged the points of improvement in the economy. Strangely, at least to us, there was no reference to the OPEC meeting outcome and the latest surge in oil prices. In an interview last week, Governor Paulos said that there is heightened uncertainty of Canada's outlook after Trump's victory, suggesting that it's too early to increase or decrease borrowing costs. He also added that only another major shock would lead him to add more stimulus. As such, we expect the bank to keep its hands off the easing button for a while. The Canadian dollar is likely to remain sensitive to swings in oil prices, as well as new economic data coming out of the country. Dollar CAD traded lower following the bank's decision and broke below the 132.70 hurdle. Subsequently, it fell below the support now turned into resistance of 132.20. Given that the short-term trend remains negative, we would expect the aforementioned break to set the stage for more bearish extensions and perhaps challenge the support obstacle of 131.70. As for the rest of today's events, the US initial jobless claims for the week ended on the 1st of December are coming out, and expectations are for a decline. Besides President Draghi, we have two more speakers scheduled on today's agenda: Bank of Canada Governor Paulos and German Finance Minister Schäuble. We will pay some special attention to Governor Paulos, given yesterday's Bank of Canada policy gathering. We want to hear whether he maintains the view that the bank is likely to remain sidelined for some time. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.